Hello and a very warm welcome to everybody. I am Shrija Agrawal and you are watching the LiveMint special series on future of payments. At a time when there's so much uncertainty in the environment, at a time when business leaders and CEOs are grappling and trying to seek answers to the questions that where exactly is the next normal or the new normal. Perhaps the conversation now needs to shift from finding the next normal and trying to understand that how do you really become anti-fragile. When you become anti-fragile, what really you're talking about is to how do you grow through change and challenge. Anti-fragility is of course of two levels, one at the organizational level and the other at the sectoral level. Today we talk to you about a sector which has seen relentless or explosive growth in the last 2 or 3 years. Of course, we're talking about the payments industry, which really has grown on the back of huge capital influx, on the back of huge internet penetration, on the back of huge e-commerce boom, and the growth of this sector has been very well chronicled. But the question now is that will the pandemic really test the resilience of this space? Today, in our first installment of the series Future of Payments, we talk to very well distinguished experts trying to really understand how they are thinking about building anti-fragility in the organization and also building organizations that last for long, which includes thinking about innovation, mental models, and really ensuring customer growth, which really is at the heart or the most important stakeholder in any conversation. And what is better than doing it with people who do this as part of their daily jobs? Please help me welcome Aditya Kulkarni at Cashfree, Rohit Kulkarni at Payoneer, Gupta at Bessemer Venture Partners, and Sanjay Swami at Prime Ventures. Aditya, I would like to begin with you.
Yeah, thank you, Shrija. The way the company's DNA is, right, Cashfree, to be frank, right, I joined just 11 months back, Cashfree, I'm heading the business here. And I'm in fintech space for last 7-8 years. So I'm keep observing how the different competitions or the different companies are evolving in terms of the product and processes. And when I see Cashfree, right, if you see the evolution also, eventually the first one was a bulk payout solution in 2015. Instead of taking the regular route of a collection side, the company went through the payout solution. So even now that trend has continued where more of the solutions are merchant or the customer centric than more of a market driven or the competition driven. So how we are working now also is that what is the need of the hour? For example, even the RBI vision document talks about it. How do you give the better user experience or the customer experience? So Cashfree is working on providing those particular aspects. One is how the payment should be seamless, how the refund should be processed, and how reconciliation should be done. So these are the new benchmarks we are setting in the industry, and we are now defining the norm for it, right? Rather following the trend which is out.
To you now, we heard from Aditya. I'll come to you now. You have seen the various cycles of fintech entrepreneurship. You've been a seasoned investor. You've invested in the likes of Motilal Oswal and things like that. That was like first wave of financial services entrepreneurship. Now we have this rise and advent of digital payment upstarts and fintechs. When you have a situation like a pandemic, which is an unprecedented hard time, what is your advice to fintechs? How are you ensuring the key metrics? What is your communication with them? What are the kind of conversations that you're having with your entrepreneurs? Give us some color there.
So I'll split it into 2 or 3 different parts, Shrija. One is fintechs is a sort of a very bastardized word. There are different ways in you think about that business. So there are a bunch of people who are software businesses, and there are a bunch of people who call themselves fintech, but are basically lending businesses masquerading as technology businesses. And third is what's happened with the COVID ecosystem. And both businesses have, I would say, tailwinds and headwinds from this COVID-19 impact. So let me cover the first one, which is the lending business on the financial technology side. I think the fintech ecosystem of technology lending is basically sort of a better operationally run bank. That's what it essentially is. They're taking risk on their balance sheet, sometimes in partnership with other banks. But basically, it's a lending business, and lending businesses are not necessarily tech businesses if you're building your own balance sheet. At the end of the day, you are driven by how much NPA your portfolio would look like, how much liquidity you can have, both from equity and debt perspective. And it's not even COVID. I would say relative post last 9 to 12 months, liquidity side has been massively challenging for the lending fintech side of the ecosystem. And I think that will continue to be challenging, and their portfolios probably have been hit the most. And the liquidity to them, they probably are the last bucket that large banks and NBFCs would look at from giving large allocations in terms of debt. Even housing finance companies today, which have secured assets, long-term nature, essentially are facing liquidity problems. So I don't know if you saw the HDFC result. It's gone, the total provisioning on COVID has gone up 5x than a normal provisioning that they do every quarter.
Sure.
I'm pretty sure that on the personal loan and credit card side, that number, I don't even know what that number is going to look like. A lot of businesses on the lending side are going to face a tougher challenge on the fintech side. A lot of them will not survive. On the software businesses, I think the software businesses inherently have a very significant advantage. Just by the fact that the gross margins of this business are particularly very interesting. Secondly, I think they've been hit by the pandemic deliberately because they are derivative businesses on top of offline and online merchants and use cases thereof. And those have had challenges where due to shutdowns, the volumes have gone down dramatically. I think the tailwind for those businesses is the fact that cash on delivery as a concept in the consumer internet ecosystem side is going to disappear and continue to disappear from a customer perspective and merchant perspective. That's one. Second, I think the DeMon was the first digitization throughput that happened, and you had Paytm and a bunch of other companies come up. But basically the whole UPI ecosystem, and Sanjay probably knows this better, he's been involved in a bunch of that. They have basically upended the monetization model of these businesses. The challenge there is not adoption from a customer perspective or merchant perspective. Post COVID, you will have a lot of tailwind on adoption, whether it's pay later, whether it's payout, whether it's from Excel sheet, 7 people in finance getting together and trying to do this like what Cashfree does, to digitization, integration with merchants, backend, front end, lots of stuff, lots of tailwind. Short term, lots of headwinds given that the volumes have dried up, but that's like 9 to 18 months. It's anybody's guess what it looks like, but when it's back, there will continue to be a lot of tailwind for this business. The challenge is monetization, because the UPI does not allow anybody to effectively monetize. And on online payment ecosystem, when you are basically the businesses again are trending towards lending as marketplaces. So I have the flow, let me start a lending business on top of that. That seems attractive because the less than 2,000 rupee on the debit card and on the UPI side, which is the fastest growing segment, really does not have a monetization angle. So I think a bunch of businesses would get built out on the software side. I think the challenge that they will continue to face is monetization, but I'm far more bullish on the software platforms. Given the tailwind on adoption, I have to find a monetization model which is very credible in the long run, not based on lending again. That's how I would see it.
I get to you now, Sanjay. I think Vishal kind of laid out the opportunity and the challenges set for us, and it was very, very clear and candid, and I must say, like, extremely out there that, you know, he is not such a big fan of lending businesses, so to speak. I think he will put his bet on software. I would like to understand from you, and talking specifically about the payments piece in the entire larger fintech, conundrum, so to speak. How will the monetization models evolve there? You know, can you sort of give us some sense and color there, Sanjay?
Sure. So just quick background for others, for listeners as well. So I'm an early stage, probably India's first, mobile payments entrepreneur from my MCheck days, and then worked with Nandan and the Aadhaar team as a volunteer for some time, and then have been quite actively involved both as a volunteer on iSpirit India stack, as well as as a venture capitalist investing in a variety of companies, right? And I think as a VC, our philosophy has always been that eventually there will be no money in moving money around, right? So it was something that we always believed was coming. So whether it was a company like EasyTap in the payment acceptance space, or Happy in the business payments space, Neo in digital banking, Reco in transaction reconciliation, all the companies that we have looked at, we have always looked at it, and I completely agree with what Vishal said. The value will be in software around digital payments, right? So the one thing that companies like Cashfree and the others have also done very well, and as well as generally others in the ecosystem, is with the advent of UPI, we have a real-time, really low cost from a cost perspective, and zero price from an MRP perspective. Payments rails that is one of a kind right now in the world, that allows real-time interbank payments, right? It's not possible. Today, my close friend in the US had to send me back $70 for something that I had paid for him here in India, and we were struggling around how do we do this, right? In India, it would have been instantaneous, right? So I think we have a very unique situation. And the second big thing that's happening is the demonetization actually achieved something very big, right? It wasn't that, people in demonetization, people move towards accepting digital payments as a way of payment, but still probably preferred cash at the end of it, right? At a mass level. Today with COVID and then the concerns around touching cash and stuff like that, suddenly the digital payment has become the preferred mode as well, right? But the first phase was, at least my milkman would say, that's okay. If you want to pay me through UPI, that's okay, but I would prefer cash. Now he says, I prefer digital payment, right? So that has changed, right? That's the next big step function growth. So when that happens, right? So earlier digital payments was 3% of the retail payments, right? And very small percentage of B2B. Because B2B was also completely doing checks, right? So the need to reconcile transactions, the need to have software processes, it wasn't that significant, right? But now, if you look at it from a utility bills perspective, right? And I'm sure Cashfree and others are experiencing it. It's probably 80%, right? And in fact, it's probably even more, because everybody is paying through it, right? So that creates it solves one problem. And yes, there is no monetization model for the actual payment processing. But the fact that it's such a core part of everybody's business means that they're going to need, analytics tools, reconciliation tools, other sort of tools around, things like, fraud management, making sure that the collections are, automated in several ways. So that creates the opportunity for software players to build businesses that are solving the payments problem, where the actual moving of the money is not going to be something people pay for, right? So that's where the focus is going to be. And then if you overlay, the four big areas, right? If you have payments as the rails, financial services is really about savings, lending, investment, and insurance, right? With the exception of lending, which probably never has a product market fit problem, right? Giving money never has a product market fit. Collecting is the challenge. And so
Both
lending will
you
come
are
back. There's
so
no question about it.
anti-lending. Both you and Vishal
No,
are like
I'm not agile. And in
yeah.
fact, what I'm saying is lending is never going to be a problem, right? That business will absolutely come back. It's a matter of time, right? But the other three have taken off, right? So because people are putting money in savings, people suddenly have a lot more disposable income because nobody's eating out, nobody's traveling, nobody's buying any stuff. So they're putting money into investment. So you're going to see a lot of that boom happening. And people are buying insurance because now suddenly people have realized that, I'm better off if I do insure myself, right? So I think as a investor in this sector, while there might be a short-term sort of slowdown because it's just impractical to meet people and make investments easily, we are really excited about the opportunity here, and we're very bullish about the number of new startups that are going to come, and the opportunity for existing startups as well to scale up. So it's going to be a very exciting time in India.
Okay, I come to you now, Rohit. We heard from the two VCs. I also sort of heard from Aditya. I think both of them are very clear on what pockets within the fintech space sort of seem interesting and appealing to them. Perhaps you can give us a view from the other side. What has really the pandemic meant for you as an opportunity? And I think the word which was majorly used around was a rise of the contactless economy and what it really means for the payment space. Throw some light there for us, yeah.
Sure. Thanks a ton for having me here, and really great to hear some insights coming from Aditya, Vishal, and Sanjay. So for a quick intro for the audience's sake. Payoneer is a global B2B platform which helps cross-border sellers and customers get paid from their buyers. It's a very simplistic explanation of what we do, but largely what happens is today when you do international transaction, and typically you use banks for doing that, it's pretty complicated transaction. It goes through multiple corresponding banks and stuff like that, and that's why it's super difficult. Today, if somebody has to get paid in the US dollar, and Sanjay is testimony to it that he's finding it hard to get even $70 paid from his friend. I wish it was a commercial transaction. He could cut an invoice to his friend, and I could give him a very slick platform where he could do it in seconds, if not faster than that, if not real time.
There's a pitch
Right?
coming from Rohit's face.
Yeah, sure. In short, what we do is really help these exporters or people who want to sell abroad, both in goods and in services. Coming back to your point on what does the pandemic actually mean and what has happened in the global sphere, this downturn, if I may call it so, I'm not sure if I should call it a downturn or no, but still is a little different than the previous one. If you look at 2008 2009, it was consumerism which was really affected very bad. This time around, it is the inability of people to go back to work, and that's more on the supply side of workforce than anything else. So it's not that people don't have money to buy things or they're not going to buy for a very long period of time. So to that extent, it's a little different than what happened in the previous times. And we believe that as soon as we are able to kind of get things back into action, people have a short memory, things will change, people will come back to traveling, people will come back to doing all the normal things. But coherently, the certain things will change permanently. For example, we're doing this edition on a Zoom call. Some of these things will become very normal. And what we saw was that in early Feb and if, say from early Feb to early March, things on the supply chain side was disrupted very bad, and we anticipated that things are going to kind of crash down south. I remember the movie Gravity, in which they have a free fall, and I thought we were going through some stage like that where Sandra Bullock's and the team is really coming down. But what happened is that our estimates were completely off the record, off target. Q1 was better than anywhere else, any other quarter for us. We beat our budget numbers. We work with the likes of Amazon and Walmart and some of the other marketplaces, helping them pay their suppliers, and the sellers collect money from these marketplaces. And the reason is that most of the markets except for India were able to really come back very fast, and a lot of traders, manufacturers and suppliers, especially in China, were able to pivot into essential supplies, and the numbers are staggering. I don't know if you read yesterday's or day before yesterday's Walmart's results that came out. They talked about 40% odd growth in this period. We ourselves saw double-digit growth for all the e-commerce businesses globally. India has been a little different because of the lockdown. Sellers have not been able to send their goods out, so we did see a decline in India on the goods side. But that's not true for other verticals. For example, the what we call as services vertical and the freelancer vertical, which we also service, volumes have held on. We thought freelancers will be out of business. They won't get paid. They'll be in really very hard conditions. They'll face very hard conditions. But that didn't occur. In fact, 74% freelancers said that they didn't even drop price. We did a survey with them, and we found out that they didn't even let go of smaller teams that they had. So things for them are happening. What we realized is that the losses that happened to us, or the downturn that happened to us in certain sectors like travel, for example, Airbnb and Uber are some of our clients, and they obviously their revenues tanked big time, but others compensated. So overall, people who had a portfolio mix, people who had a good industry mix, really did not get affected that bad. But certain sectors, especially the low end gig workers, the migrant workers, those got hit very bad. So there are like pockets of really badly affected people, but by far we didn't see people really lose revenue or mayhem spread across. So we're really very positive in the way we'll come out of it, and we really hope that things take a better shape as we go along.
Sure. Aditya, I'll sort of get back to sort of you now. We heard from Rohit also, and he said that it has been a mixed bag for them. The business has not really been impacted so badly. I really want to understand, get onto this question of innovation and the culture of innovation in the organization, because it is extremely important. And how do you make sure that one is the innovation as a response to COVID? So is that a more permanent response to a black swan event, which tests the resilience of action? How have you been thinking about making changes in the organization when these events happen or it did not happen? Things really remain the same, and you are extremely strong and you emerge from this stronger. So, sort of Aditya, you can give us some color there that how have you thought about innovation within the organization, and as somebody who is leading business in the organization, what is the mental model on how you have thought about this? Give us some color there.
Sure. Thanks, Rija. So this was a black swan effect, and I would say in my short career of last 12, 13 years, this happened twice, right? The one was demonetization, the second was this COVID. And I am in payments domain, and this impacted me in both professionally and personally. And right now when I look at it, right, so some of us, we spoke also, right, that the user behavior, will it change permanently? Our view is yes, to some extent, yes, there will be tailwind effects for this, but some of the behavior that is adopted in such a condition of duress may not last longer. But yes, if you keep nudging the user in the direction, yes, the behavior will continue. And as a business head, what I see is that when this COVID lockdown, everything started, some of the industries got impacted severely in a negative way. For example, travel, which just fell off the cliff, but at the same time, gaming, education, edutech kind of sector, right, which really took the uptick growth in that way. So we can see that some of these trends will continue to grow. We majorly adapted to those kind of learning. For example, as a professional also, I just finished a Coursera course, right, which I never did when I'm locked down. I saved 2 hours of my time every day. What do? I finished one fintech course. So this will keep continuing in my view. And how we are considering it is, yes, some of the points which Vishal and Sanjay mentioned, right? The moving money is a small part of it. We have to look at the holistic picture, right? For example, a gaming merchant, say, for example, what is that they require as a payment solution rather than a payment product? He needs collection, he needs payouts, he needs some sort of analytics, he needs a fraud management system. So our innovation is more on the holistic side of it. It is not about opening the next door to find out, oh, okay, I will build a small piece of software which will help. Rather than look at it, can I cover the entire sector and give the solution and help them to, one, allow the merchant to streamline their financial supply chain. For example, if it is a hyper-local merchant, can I collect the money, get the instant settlement, and immediately give the money to the vendor? So that way the disruption in supply chain will be lower. The second one is the user part of it, right? How do we enhance? Now user has come to the platform. Now it will be a cardinal sin on my part if the transaction fails. So what do I do to make sure the transaction is successful? I have to improve my infrastructure, because we are happy, it's a good problem, right? Everyone is making online payment. That puts a higher stress on infrastructure itself. So I have to build a scalable systems. I have to build the system which work 24/7 every time, all the time. And users should be able to move the transaction. These are some of the thought processes that we have.
Sure, Aditya, I understand that. But how has your business been impacted? Like, Rohit laid out that, it was a mixed bag. While some pockets were going down, some pockets were also going up. So can you give me a sense of how has your business impacted? It's like down by 25%, up by 30%. What can the sense can give us? Then the first quarter, maybe the Q1.
The last 4 or 5 weeks, we are doing weekly reviews, right? And our weekly growth is around 10%. We have grown week on week basis. The negative impact, definitely NBFC and travel got hit. But at the same time, we've seen a very good growth in gaming, edutech, insurtech segment, which we have seen a very good jump. So whatever we lost in some of the sectors, we have comfortably gained in other sector. We are performing better.
Interesting. Vishal, I come to you now. I think it's the second round of questioning. And in the first round, all of you sort of laid out the opportunity and the challenges set. And we spoke about the anti-fragility bit and how we're thinking about this. I want to come to you now, Vishal, understand from you that, when you take a 360-degree view of the entire financial services landscape, and we also had a downturn, which was the economic downturn of the past. Right now, what we are seeing is a mix of humanitarian crisis plus an economic downturn. But how do you build an organization which lasts for so long, that is so resilient, that it can take these shocks, within itself? And you mentioned some examples of some great companies that you have backed, what maybe you have learned from them, 3 or 4 key pieces of advice about innovation or mental models, or perhaps what you have contributed to them, and you can actually substantiate that with examples. It will be very meaningful to our watchers and listeners.
So Shrija, on the startup ecosystem where I operate, rule number 1, don't run out of cash. Please don't run out of cash. Okay, that's the single most operating rule for the startup ecosystem, because a demand will happen, a pandemic will happen, which has affected a large swath of things. Something else will happen. Right now it's all about people who have the ability to survive, have the ability to essentially morph themselves and build better solutions and better products. But please, the single most important factor for our ecosystem is survivability, and which essentially means that when they're burning cash, I know Aditya's organization is not burning cash right now, but for most of the ecosystem they are, and if they are, then they essentially need to make sure that they survive. That's rule number 1. I think the
comment.
So no, I think the key here is basically, so for example, pre-UPI, what Sanjay mentioned, there were people making a ton of money on just moving the money around. So look at MasterCard and Visa globally, 100 billion plus organizations. They have lots of things, but they essentially do authentication and make a small toll gatekeeper sort of revenue on that. I think in an Indian context, and I'm going to stick to India, that does not exist, and a lot of people were making money of that essentially pre-UPI. I think that, but people who were actually building core solutions, like what Aditya mentioned, is it's not about moving the money or, I have a transaction that I can deliver for you, but it's about the solution with the large enterprises and the small enterprises. And I think the complexity, and I'll stick myself to the payment ecosystem. The complexity of this ecosystem is I think sometimes we think it's trivial. Actually, it's very, very hard to do what these guys do. What Rohit, Sanjay, and Sanjay in his past and what Aditya do is an exceptionally hard business at the back end. From a 24/7, 99.49 availability, it's not easily done given all the challenges that exist in this country on infrastructure and everything else. To be able to do that seamlessly and deliver solutions to large enterprises at a price and a cost which gets renegotiated in every monthly conversation is not an easy task. So if you are able to actually build value for your customers, that's what ensures survivability. That's what ensures ability to survive and grow in the future. So I would say it's delivering value to each one of the customers that your stakeholders in the current ecosystem. For example, there are 17 or 18 different ways that you can pay digitally in India today. Probably only country where you have, I know, 30 wallets, 17 bank apps, and whatever else, and a Sodexo coupon laid on top of that, and able to seamless and hundreds of transactions, intermittent lines that connect the bank's legacy banking ecosystem, and being able to seamlessly do all of that recon in an instantaneous manner is is essentially a job that's not easy. But what has happened is that that's become a commodity now for a lot of people. And that commodity therefore has value to it, but it's a small value to it at the end of the day. So then you have to basically say, what else that I can do for my customer? Is it about same day payment acceptance? Can I lend against it because I already know that money is sitting in an escrow with the bank? Can I do a recon because of 100 different payment instruments across 3,000 stores? And how do I recon that into an ERP? How much is received from whom? Which bank owes me how much? Move that money to a current account, whether in an HDFC and ICICI. Who's going to give me the best bang for the buck? Is he going to renegotiate my payment gateway rates if there's a PG rate against that? And can I pass that on to my customer? All of that is a complicated ecosystem that people essentially need to work through. So I think value to the stakeholder is very critical during this period of time. The one thing that I disagree with Aditya and Rohit is I think we are in for tough times. I think it's not a supply disruption. There have been massive job losses in the ecosystem, and a lot of purchasing power is going to go away. And none of us are pandemic experts. We really don't know what, when, why. It's very hard to answer any of those questions. And looking at rear view in the past is just very hard. And all the numbers that pop up every day on the screen actually have no real meaning at some level. We are all investors. We are looking to value businesses on what happens in the future, not what happened in the past. What's happened in the past is just a mirror to say what potentially these businesses could deliver in the future at best. But given a black swan event like this, it's just very hard. So it's essentially, I think if you have a business which is essentially just going to be retail focused in the long run, we don't even know when retail comes back. We don't know how many people will walk into for example, I don't think I'm going to walk into a mall for the next 12 months. No chance. Irrespective of where pandemic, no pandemic, it's just going to be very hard. So I'm not swiping my credit card, debit card, whatever I have, I'm not going to swipe it. And I think there's a large percentage of people who have the ability, essentially the SECE category is not just going to walk into any of the crowded ecosystems. And that means a lot of things will shift online. And what can you deliver online for these companies? The challenge with online in India is each ecosystem is an oligopoly or a duopoly at best. And in oligopolies and duopolies, they don't let you make money as a vendor. It's very hard. It's not straightforward. So why would Swiggy want to pay Cashfree for all the payouts if it can hire 100 engineers and build out the whole ecosystem itself? Yes, I will pay it because I don't have a solution today and I learn from Cashfree, but I'll build it on my own. The challenge is the e-commerce ecosystem. So is everybody like a lifestyle to everybody will have like a online cart ecosystem with logistics as a platform, payment as a platform, and everybody else as a platform. That becomes interesting, because if I'm dependent on Flipkart and Amazon, I definitely ain't making any money. In short run you may, but in the long run definitely not. So I think it's not an easy situation to be in, at least generally from a business structuring perspective. And therefore, if you can build value for that, not for Amazon and Swiggy and the Flipkarts of the world, but for the next layer, which is the large SMB 100 store, 30 store, 20 store, or the offline ecosystem, because they do not have the ability to do this contactless payments, to recon, to everything else, to ERP integration, to lending layer on top of that, that becomes very interesting. But I'm not so sure that the online ecosystem with the oligopolies is an ecosystem where you will make money in the long run.
Interesting. I think thanks Vishal for giving such a candid and having such tough questions laid out for the entrepreneurs out there. Of course, it's not going to be easy. I would love to hear if Aditya and Rohit had a counter view on this, but I will get back to Sanjay now. Sanjay, I think Vishal was kind of pretty clear and candid as to where he sees opportunities set, and he said that retail is perhaps not necessarily the way to go forward. If I were to do a reverse pitch with you, Sanjay, and if you were to be in the entrepreneur seat, for instance, and there were three ideas that you were to pitch to the VCs right now, what would those really be? Like keep like 2 minutes for every pitch. So I'm putting you on the hot spot right now.
No problem. I think, the first and foremost is that whatever I'm doing had better get a tailwind due to COVID, right? As unfortunate as the circumstances are, the reality is about 30% of the businesses are getting a massive tailwind because of COVID, right? So, what I tell entrepreneurs is, this is your opportunity, right? And, let's ignore the circumstances, right? We all agree that it's unfortunate and it's the reality. But where does it create an opportunity, right? So, to what Vishal was saying as well, right? Even in retail, actually, he picked a very specific space where there is actually huge opportunity, right? And actually, we constantly do work in that space through one of our companies. But there are a large number of retailers who have been, beholden to footfall in their stores, which is not going to happen, right? But need to go online, do have the ability and the brand and the relationship with their customers to have them shop from them online. So they don't have a distribution problem. They don't need to go to Amazon or a Flipkart to get their distribution necessarily, right? Because they do have the relationship with the customer, but they don't have the infrastructure and the ability to pull that off, right? Perhaps the last mile logistics delivery. So that will create one category of opportunities, right? Taking existing businesses that need to very quickly transition to go online, otherwise they're dead in the water, right? So although you might say retail is a bad place to invest, there are certain sub-segments which are actually very attractive because it's survival for them, right? The same thing we have seen, we are in this company called MFine, which is in the telemedicine space, right? 6 months ago, there was talk of people would say, well, is this thing legal in the first place, right? Now the doctors are saying, please don't come to me, please get on this app, right? So it's a complete 180 degree, different point of view, right? Anything to do with the remote. In fact, my Twitter tagline says remote is now, right? Or the future is remote, right? There's a small pun in it in case if you got it, right? It's remote, but it's now, right? And so anything to do with digitization, right? Whether it is intercity trucking, whether it is the quote unquote, the tagline that nobody liked, but the Uberization of whether it is any sort of field force management service. I think we are going to see more and more. So that's the second segment, right? So the first one, I would say certain categories which are going to help large businesses get digitized quickly and become, online businesses, because that is one. The second one, as I said, payments is going to become mainstream now. Digital payments is going to become mainstream. The money isn't in moving the bits, but there's a lot of services around it because it's becoming, the largest part of somebody's, revenue, right, for a large company. So you cannot take any chances with that, right? And then, everything around education, right? That's the third sector. Education is being changed completely. It's becoming digital faster than you know. We are seeing in one of our portfolio companies that's in the classroom training space, right? I mean, they have 50 million active users around the world, but suddenly India opened up as an opportunity, right? It was not something that they considered at all. They had a huge volume of users in the US. And we saw in the early days of COVID, Indonesia, Malaysia, Southeast Asia lighting up, literally adding millions of users a day, right? But now they're starting to see some of that pull coming in India as well, right? So I think there are huge sectors and huge industries that are going to be digitized and transformed. Industries that have been really, really, I would say, lethargic about, biting the bullet and doing it because they were doing fine. But now survival and compliance is another thing, right? There is no better value proposition to any company than saying your CEO will not go to jail. Right. So once that's your value proposition, actually, you go to the top of the stack of any sales process. Right. Now, for entrepreneurs, it's important to make that transition. Right. They cannot be sticking their head in the sand saying this is a 3 to 6 month issue. It's going to come back. It is not going to come back in certain areas. Right. And it may have created an opportunity which is far more attractive than what you're working on. Right. So don't be stuck in your ways because some new guy is going to come with no legacy and no baggage. and is going to straight go after the new opportunity that's been created, right? So very important for entrepreneurs to use these 3 to 6 months to not be I would say obstinate about what their business is, right? It's very hard to do. I totally agree, and we have companies in our portfolio and very high quality founders who keep saying, well, but this is going to come back, isn't it, right? So I think very important for entrepreneurs, there are companies with money in the bank, with customers, with revenue, but there may be a much larger opportunity, and oftentimes it will be an adjacency. It will be so I always use this aspirin versus vitamin test. I always tell people, look, in this moment, right, all of us are only going to buy essential services, right? Well, just ask yourself, is an aspirin an essential service, or is a vitamin an essential service, right? There is no way any of us would buy a vitamin, right? But an aspirin, of course we will buy it, right? So just make sure that for the target segment you're going after with the product and the value proposition, this has to be an aspirin, right? Because when you're solving a headache for someone, no matter who you are, they will want to buy your product, and price is not going to be the reason why they will buy it. It's because survival, right? So that's the key message to anyone. You have to convert yourself to being an essential service, and then there are lots of opportunities.
Interesting. I'll come to you now.
So will you fund me? On the page.
I'm not quite sure.
Did I pass?
You're quite there, I guess. Yeah. So Rohit, that was quite a mouthful from you, Sanjay, and thank you for laying it out for us. Like, this is pretty interesting. Rohit, we heard from two VCs, and I think both Vishal and Sanjay made their points very pertinently. Vishal really pointed out this entire growing case of duopolies, monopolies in the retail sector and how to really survive. And while Sanjay said that convert yourself being an essential service, try and solving a headache for somebody essentially. So Rohit, are you in the business where you are solving headaches for people, and how strongly can you convince Vishal and Sanjay on the other side saying that you are there for long and that you're resilient as an organization?
Sure. And I think there are multiple underlying themes. You're talking about innovation, we're talking about sustenance, and you're talking about growth, right?
Yeah.
So let's take an example from the past. What changed for, let's say, Alibaba in 2002 was the SARS epidemic, if I can call it. I really am not into segmenting and defining what a pandemic and epidemic is, but let's call it that for a moment, right? And we saw the birth of Taobao, Tmall, and even JD.com and stuff like that. It happened to that area. And that's largely because people couldn't go out. The same kind of scenario that exists today. Essential services first and survival first. So there is a definitive, thing that we've seen from the past, which is laying out today. And it's going to lay out a little different for goods and services, both in my mind. If you look at goods, even after the existence of Amazon in the US for almost 25 years now, and I used to work with Amazon for a while before I joined Payoneer. In fact, I launched Amazon in India before I joined Payoneer. So from that perspective, I can tell you that even till the late 2016s and 17s, the total digital commerce market in the US, which is a developed economy, was sub 10%. Today, it has leapfrogged, and it's estimated to be around 25-26%. Some of the reasons are obviously that the things like COVID and pandemic have caused, and we will see something similar happen to India at a much faster pace than what happened in the US. China happened at a faster pace than the US, and we'll probably see India happening at a faster pace than even China. So we will leapfrog to 30 or 40 or 50%, but doesn't mean that the physical retail will go away. What they need to do is rediscover themselves in form of what is appealing to customers, and Sanjay spoke quite eloquently about it. So I'm not going to kind of repeat what he said, but they need to find their sweet spots. They need to find out what are those additional services. And there are two things that come to my mind when we talk about goods. One is, what are the additional services, the scope of services itself that they offer in addition to the product, which is going to differentiate themselves and allow them to play the market in both a online and offline model. And second is sourcing itself, right? So product quality and supply chain and those kind of things are really going to matter a lot as we develop. So people have to work both in putting forward new technology to be able to serve their customers, with newer features, newer services. At the same time, work on their back end side of their business where they can get faster supply chains, much more augmented supply chains, and at the same time, better product quality. And product quality is relative to price. So whatever product quality they talk about. For services business, it's going to be very different. Think of you know think of somebody, simple thing that, will I go back in an Uber and sit as I would do it say 3 months back? No, I don't think I will do that. I'll be very worried. And especially a large proportion of our population used to be Uber pool users, not even Uber users as they were, right? So they need to come back and tell us how they're going to how the driver is going to tell us that the car was cleaned 15 minutes before I sat in the car. A classic example is, when you go to a hotel, the way the toilet paper is folded tells you that the room was cleaned before you entered the room, right? I mean, those are simple granular innovations that will work. When you enter an aircraft today, you get a pillow which is packed in that polythene, and breaking that polythene gives you a satisfaction that this was cleaned. So there are going to be these small granular changes, and these are just examples which I have seen in the past. So they really don't will not necessarily stand the test for the future. But I really don't see large, big innovations alone coming. I see a lot of small, granular innovations really coming through, which will tell us that things are normal, things can be used again in a different normal, and people at some point of time will get back. I mean, I don't think the shared economy or things like travel will be put off forever. Whether they'll take 2 years, 1 year, probably I'm not a visionary to kind of comment on that, but definitely not for the next 10, 12 months. To be honest, there is a sinister happiness that I'm not traveling. I'm spending more time at home with my family, so I'm not looking forward to more travel for sure, right? So those are some of the things that will work as far as innovation is concerned across the board. In at Pioneer, we really believe that we have two or three opportunities. One is the ecosystem play, which again Vishal and Aditya both spoke of. So we don't believe that we are just a payments company. We believe in building the ecosystem. So today, when you come to Pioneer, you not only get to open new markets with us. So if you are a seller who's selling on Amazon in the US, you can expand to a marketplace like Cdiscount, which is a leading French marketplace, and we help you really go there. So it's not only payments, but we do like a bunch of activities which is forward and backward. So we'll help you with logistics. If you are a service provider, then we would do time tracking for you as a software, or invoicing as a software, or we'll have APIs with partners like QuickBooks and Xero, where you will be able to do your accounting in a much more integrated and seamless way. So there are a bunch of such things that we do. And again, the same concept holds true. We don't look at one big innovation necessarily. We look at small innovations which are improving customer experience as we go along. In India specifically, we believe that innovations around the regulations will really be very opportune at this point of time. Simple example, my mom went through a hip replacement just before the COVID, and I wanted to apply for a insurance claim. It's stuck because I can't send a physical document to the insurance company. This will change. This will get disrupted for sure, because all these paperwork will become digital completely, and the innovators will really find a very, very clean market there. So these are some examples that come to my mind. And Pioneer really believes that the ecosystem and continuous development of some of these things is the way.
Yeah, so we understood that. I think in the interest of sort of time, I think I wanted to sort of get to another round of questioning, but we're sort of getting to the concluding round of questioning, and very specific to the payment space, because we spoke about innovation, customer experience. We had two VCs really talk about the opportunity and the challenges landscape. We also saw Sanjay getting into the other side and doing a reverse pitch. We saw Vishal talking sort of very upright about whether what he sees makes sense or not makes sense. Aditya trying to tell us that what innovation he has been doing, and of course Rohit telling us that he's very positive and bullish to where he goes from here. Two specific trends from each of you, and very specific to the payment space and in India. What could those be? The two defining trends for digital payments in India, the future of digital payments, and where do we go from here? Aditya, I'll start with you.
Just a couple of lines, right? So before I go to the trends, the way we view the payments is, it's an infinite game, right? So it is not like a cricket where set of players playing set of rules and you declare, oh, this guy won. No, it is ongoing and it will continue to go. There are no definite rules and the result is undeclared, right? So we can keep winning this game and keep fighting it. So in our view, the two key trends will be, one, as we discussed, a holistic platform where we are not talking about doing part of the business, right? We are talking about entire financial supply chain. For example, which Rohit just mentioned, right? The claim settlement is pending. So we want to not only talk about the collection part of it, settlement, everything should go digital. So we are talking about all the four pillars, right? The savings, lending, investment, and insurance, everything will be API driven. So that's our view. It will be more of a platform play in future. The second trend will be the scalability, right? So we are happy to talk a lot about online payments, but do we have that kind of infrastructure? Even a fintech company like us may have. Does a bank have that kind of structure in their legacy system? So maybe there is a play for a fintech companies to work as a TSP for a bank and help them to build their infrastructure as well. So I see that these are the two trends, a platform and more on the infrastructure side. The rest will be user behavior, which will keep changing, and the business model will keep evolving when Sanjay and Vishal keep funding the new business model. That will keep going.
So Vishal, Aditya has passed the ball on to you now, clearly.
Yeah, no, I think one area that I definitely am very excited about is the whole payment software ecosystem. I think not only B2C, but I think the massive tailwinds I see are on more on the B2B side, because they've been the most resistant so far. But I'm pretty sure both Aditya and Rohit are seeing a ton of videos that they're doing product demos from small to medium businesses and even large businesses who want to digitize their across the financial part of their platform, whether it's payouts to insurance agents, whether it's acceptance at point, whether it's in retail, in financial services, across the ecosystem. I see the digitization wave, which we are very consumer focused, because we sort of, as individuals, we tend to sort of operate and look at that because that's what comes up to us very quickly as personal experiences. But I think there's a very large market on the B2B ecosystem side, and I think that's going to be very large with lots of tailwinds behind that business, and all the business are looking to digitize those opportunities. That's one. The second one I would say is, I think this essentially brings, let me be contrarian on this one, the death knell of lending fintech. I think ILNFS was the first blow. I think this essentially is the nail in the coffin, which essentially says that I can build a lending business without operating as an NBFC, and I want 10 times revenue multiple, when basically you're a price to book business at the end of the day. It is the best lender in this country before COVID was at 4 times price to book, is now operates at 3 times price to book and 2.2 times price to book. So has grown 25% year on year for last 100 quarters. So who are you to have a price to revenue multiple if you're lending on your balance?
Interesting. Sanjay, I'll come to you now. Vishal mentioned the death knell of the fintech lending space and huge pockets of opportunity in the software space, the B2B space. What is your sense? 2 mega trends in digital payment space defining the future of the payments industry in India?
So, first of all, on that one particular point, I think we have spoken with our checkbook. We have never backed companies that are lending, that are NBFCs. I mean, some of them have eventually got licenses, but our view has always been the role of fintech is to enable new distribution models, new use cases, perhaps where new underwriting models can help. But being raising equity capital to create a book was sort of not something that we understood, and we have never backed. But we've got companies like MoneyTap, Credex, Neo, etc., which are all doing or facilitating a lot of lending, right? And I think that's where the opportunity for fintechs are. My big prediction is actually we're going to see the incumbent banks get much more aggressive on digitization, right? And I think That's going to happen. So the fintechs, which kind of had a bit of a free run in this space now, are going to see the incumbents come back, and they need to make sure that they are playing the right roles there, right? So as I think Aditya mentioned, fintechs can enable the incumbents as well. And we need to really understand where are our unique value propositions, right? It could be in distribution, it could be in very pointed solutions. The good news is the market is huge and it's going to become even deeper, right? So earlier, a company had to do 5-6 different things, and each of which was like a $5 million a year, business unit in order to cobble its way to $20-25 million of revenue. Now you can actually do one thing, and you will be forced to do one thing and do it so well, right? That in that one particular area for that segment of customers, there is no question that you are the only one that people should be going to, right? And we are going to get into many more, and this is what you see in the US, right? Startups in the US don't build platforms and do 20 things. There are a handful of them that turn into platforms later on, but otherwise, if you see startups do one thing, they do it incredibly well, laser focused, right? And they don't do other things. That's why when we look at some of the Y Combinator startups, for example, when they come out, they look like features, right? And how can somebody actually fund this company $57 million when it comes out of YC, right? But that's because there is depth in the market and people know I can build a large company just doing this one thing. India is in transition phase and moving into that kind of a situation, which is great for entrepreneurs. They don't have to do 15 things, but you got to do one thing very well. That's easier said than done, though, right? We like to build, amazing products. Everybody wants to pitch a platform. Nobody wants to pitch a service or a solution to one particular segment, right? And that's because historically in India, you take any enterprise software company, market size is $10 million, right? That has changed now. The second big trend that I'm really excited about is that especially since the world is moving to software solutions, is that the world is our opportunity, right? Because the customer everywhere in the world, including in the smallest districts of India to New York, has been trained to buy products and services from somebody who's at the other side of a Zoom call. No longer are they expecting you to come face to face. It will be a huge opportunity for Indian companies, right? Because now there is no differentiation between somebody who's sitting on one side of University Avenue in Palo Alto or in HSR layout or in Koramangala, right? If the customer is in New York or even on the opposite side of the street in Palo Alto, the customer will say, let's just do this meeting on Zoom, right? Or on Google Hangouts or whatever. So Indian companies have to realize that opportunity, right? It will also mean that anybody can come and target Indian customers. They don't have a free run here in India, right? So you have to just basically become the specialist, become the best at what you do, and the world is your opportunity. So again, super exciting times, but definitely what worked in the past is not necessarily what's going to work in the future. And entrepreneurs who realize that will have, potential to build some great companies here.
Okay. Rohit, I wanted to come to you. We heard from Sanjay. He's very excited about the opportunity. He said the past necessarily can't decide the future, and rightly so. Because I think Vishal was also saying that the pandemic disrupted the illusionary certainty of a hindsight, and very clearly we don't really have that certainty of hindsight anymore. The pandemic seems to have disrupted that. Otherwise, from a practitioner's perspective, from Payoni, two specific trends in the payments industry where we go from here in India, what would those be? Sweet and sharp. Yeah.
Yeah, so I think Sanjay and Vishal both touched upon it, and I am a complete believer in what Sanjay said. In global opportunity being present, and we already see that, right? So people are building SaaS products which are anyways usable globally, and we have success stories already like Zohos of the world and Freshdesk of the world in India, who kind of created products which are being used globally. So same for payments. We are at a cusp where we are building solutions which are really high tech. UPI is a classic example where we anticipate that it will be exported probably in a different form and shape, but nobody is as advanced in payer IDs as we are in UPI. So I really believe very strongly that payment is going to get exported from India to the world, and that's one big trend in my mind in the next 12 to 36 months that's going to zoom past us, and we have that opportunity. The second is what Vishal spoke about, which is B2B, because that's not been liberated as yet as much as B2C. And I see businesses are compelled to adopt this today, sometimes unwillingly, but most of these people are hungry for business. They are super passionate. When you come to the SMBs, that's why they survive. That's why they really do well. And I see them adopting newer ways, more efficient ways, and they will teach us a lot in the bargain. So we have to keep our eyes open in values that they offer, or value drivers that they bring to the table through payments, and just leap on top of it. So for example, today, Swiggy's of the world can offer lending because they are very large companies. They have the software stack. They have the ability to do machine learning to be able to predict who will pay, who will not pay. But probably a restaurant down the road does not do that. I see that changing, and a restaurant is probably a euphemism for what could happen immediately versus long term. But I believe that SMBs need to be liberated, and if there are disruptions, and we will see disruptions where people will be able to do some of these things. So lending no more will be a NBFC as a game. It will become NBFC will become something like SaaS. It will become NBFC as a service kind of a model where many SMBs would be able to jump onto it. So that's those are two trends in my mind which will take place. Again, keep our fingers crossed and see some of these things happen for us.
Okay, I think Aditya, I would also just want to understand from you. We're talking about experiences. One key learning that you have had, in this entire process, what would that be? Which you've learned the hard way.
That would be which Vishal mentioned, right? The cash is king, so don't dry up. So keep always, don't play by the commercial game at all. Your value should speak, right? So that's the one learning we have learned in the past. The kind of background I have come from, the kind of company I'm working, that is all in line with that. And we will continue to go with that. We won't undercut on pricing. We don't start the price war. Rather, I deliver the value. And one of the point which Vishal and Rohit said, B2B, yeah, it's a big segment, right? So these are the things I noted down, which may be my business development plan immediately after this meeting. So learning is no price game. Let's focus on the value creation. That's it.
Vishal, give me a sense of, you're tapping the global VC network. What some sense or color of the conversation going around there about the fintech or the payments opportunity, particularly in India. Fintech is a very, very broad term. How equally excited or disappointed they are, and I think the VC and straight been criticized that they seem to be having a herd mentality. E-commerce was hot once. Fintech was hot another time. Now there seems to be this huge influx of the B2B or the softwarization, so to speak. Give me some color or sense there. The real picture of how fintech is fintech becoming a bad word really for entrepreneurs?
I think as investors and entrepreneurs, I don't think we should chase fads. Fads come and go. Valuable businesses are built over periods of time. There's always a tailwind that appears for each business at some point of time over their journey of 8 to 15 years when a valuable business gets built, and you have to cash in on that opportunity. So I don't think e-commerce is a bad word. I think you saw that in 2004, craziness in 2013, 14, a dip in investment in 2015, 16, and then you saw again craziness. So you shouldn't worry about these market cycles. Public markets, you can see 50% swings. Businesses haven't changed much. Sentiments change and dollars in and out change. But if you are an entrepreneur, you're building a business heads down. If you're executing really well and delivering value to your customers, whether it's a individual consumer or it's a B2B, that's what really matters. I think globally, fintech has created a ton of value for everybody. So if you look at Shopify, one of our portfolio companies early on, and we reviewed the fact that it went public and we liquidated our position after it went public at 10 billion plus. It's now an $85 billion market cap company, $85 billion. Out of that, what people don't realize is out of that 60% actually comes from the payments ecosystem. It does not come from their core ecosystem of allowing people to set up shops virtually very quickly and start selling. So a large percentage of it comes from payments. If you look at a whole host of companies in that ecosystem. Actually, a lot of value is the core platform, but the fintech layer on top of the platform. It may be around payments, it may be around as an arbitrator on lending, point of making on lending, variety of different things in which you can cut that data. There's a lot of value there. I think India, though slightly, in my view, is slightly different and unique. The economics for a simple POS player in a US ecosystem is 3%. That does not exist in India, and it's not going to exist. Here, you have to fight harder, in my view, to build value, because a lot of that economics essentially have been taken away by this, which is fantastic, I would say, at some level, by this public utility called UPI and NPCI. And there will be more stuff that happens there. So you have to fight differently and much harder to build that sort of value. It's much harder to build that value in fintech in India. But if you do, I think if you look at, if you can do that, it's a very large market and you get valued disproportionately, I think, in India versus anywhere else. So there's nowhere else that banks and NBFCs, which are very successful, there's a Bajaj Finance which can trade at 7 times price to book. I don't think there's any lending platform globally which trades at that sort of a multiple. Neither does a Kotak or a HDFC which trade at 4 to 5 times. So I think you get disproportionately valued in India if you're able to execute really well and monetize and build a business. The harder part is its execution is tougher, and the opportunity on monetization are slivers which are not so easy to execute in India vis-a-vis in the US, where there's a lot more meat in the market. Not only US, most of the European ecosystem and other ecosystems.
Interesting. I think, Sanjay, I'll come to you and then I will sort of get on to the rapid fire, because I think all of you are sort of sitting, seeing at your watches, and it's already time. Sanjay, my question to you really is about this entire opportunity set on the Bharat versus India question that often comes up. How does that pose for the payments ecosystem, so to speak? Are the different sort of opportunities for the metros or for the villages, and you think that have been tapped? Are you seeing some interesting ideas coming from the startups that you're speaking with? Because you have seen some on the e-commerce side, but are there some very revolutionary ideas tapping a very, very large untapped market when we speak there?
Interesting question, actually. I was just reflecting today, we talk about a lot of the migrant workforce heading back home and probably in many cases not wanting to come back into the urban settings. And what is the ramification of that, right? The one positive ramification of that is that these are people who actually have been technically savvy, who have been using smartphones and apps and digital payments and stuff. And they're all now going back to the hinterlands and they're carrying that knowledge with them, right? So one positive that's going to happen is they're all going to go back and say, hey, we should be using all these amazing UPI apps and we can do, real-time payments and interbank payments, etc., right? So they're going to be sharing it with their family, and they're going to be helping training them, etc. So in a strange way, this situation might cause a lot more digitization to happen in areas where we thought it was going to be much later, right? And so this India-Bharat divide that we like to, fashionably raise, right? And there is no need to necessarily build specifically for Bharat, because a lot of the products and services that we build, my view is actually, it's a failure on the part of the entrepreneurs if you have to build a separate product for Bharat, right? It just means that we didn't do it right? And that's why we are saying, yes, you can have a different user experience with voice as an input and things like that, but entrepreneurs really should be striving, and I'm pointing at myself as well, we should be striving to make everything so easy to use that anybody can use it, right? And frankly, I think everybody's needs are the same, right? We, learning to deal with our money, learning to manage our money, learning to invest it. Yes, the scales, and there is also this sort of implicit connotation that, people in the rural parts of India or in Bharat have less money, right? It's not necessarily true, right? In fact, right from my MCheck days in 2007, 2008, we ran a survey with people saying, how much would you pay for your electricity bill to be paid through your mobile, right? And most people in SECA said 0, because I have 7 other options, including sending my driver and to stand in line. But as you went down, people said, okay, of course I'll pay, 10 rupees, 15 rupees, because that's what my bus fare is going to be, and it's half day of income loss, right? So we have to articulate the value and build the value proposition, right? Sure, there will be some use case differences, right? So there might be a need for, perhaps more lending towards agri products in those cases versus a television or something like that in the metros. But broadly, I think, the fact that everybody has come with Jan Dhan Aadhaar and mobile, they're in the digital ecosystem. People around them have now learned about this thing and are able to share it with them. We will see again an explosion of services. I think the opportunity is large enough that somebody can say, this is all I'm going to do. But no doubt in my mind that there will be some amazing entrepreneurs coming out with solutions for all those segments. Once again, India is going to go from one large company that tried to serve the entire 1.4 billion people to a number of companies that are going after 30 million user type of segments, which is, a decent country in Europe, right? So there will be opportunities, if you can go after that segment, and if you can get, let's say, 50 to 100 rupees per user net out of that, and if you have 10% market share, now you're talking a business that's doing, 300, 400 crores a year of revenue, right? That's a great place to be.
Interesting. I will perhaps do a reverse order this time and start my rapid fire with Rohit, because Rohit has been very intently listening to everybody. So Rohit, my first question to you, if you were to name one fintech company which you admire the most besides yours, what would that be?
Actually, many.
Give me one. Give me one.
My bet is on Stripe. I think I love that company. The kind of innovations Stripe, yeah. They've done a bunch of innovations and really impressed with them over a period of time on what they have done.
Okay, Vishal, my question to you, is UPI a friend or an enemy?
Depends on who you are.
For you, what it is for your portfolio company. Suppose you were a backer of Cashfree. How would you look at a UPI?
I think that's a question best asked to Aditya. I think as a consumer, I would say it's a great friend, great technology, very scalable. I think there are of course, there are niggling issues still on the scalability, but I think that's a function of most. I don't think anybody anticipated the scale that they would get to at such a rapid pace. But I would say from a consumer perspective, it definitely is a friend. I would actually say for a lot of companies, it's taken away a revenue pool, which was significant.
Okay. Aditya, I have the question for you. UPI a friend or an enemy?
Yeah, that's tricky one. It hurts and it helps simultaneously. So I think I will still take a middle ground frenemy, because still things, right now it is hurting, but I'm sure long run this will help. So I'll keep it that way.
And one fintech company which you admire the most and besides yours?
Very difficult. But I think I'll go ahead with PayPal right now. We are kind of associated. It is enabled as a payment mode on our platform. So I think PayPal.
Okay, Sanjay, my last question to you. If you were stuck in an elevator with Sachin Bansal, what will be your advice to him on fintech?
I would not advise Sachin Bansal. He has built, a multi-billion-dollar company, so I would be asking him for advice.
Vishal, what would you tell Sachin?
But to answer your earlier question, UPI is absolutely a friend, and you better figure out how to make it your friend, right? It's here to stay, and that's the reality of it, right? So there's no point in thinking about that. And the one company I'll vote for, a company in my portfolio, is a company called Credex, which is just an incredibly beautiful business model. People have tried several times to copy it, but 6 years later, there's nobody on the horizon. And the entrepreneur is really someone who taught me something very special, which is somebody came and asked him, what would you do if I gave you an extra $25 million? What would you do differently if I gave you an extra $25 million of investment? And he instantly replied, nothing, right? Because this is what we want in entrepreneurs. You should have conviction about how you're building a business and build it, right? Money is never a reason why good companies don't die of starvation, but they could die of indigestion, right? So be very focused on how you're building your business.
Okay, I think we had a very meaningful panel here. At least I took down lots of notes and a lot of points here, starting from Aditya to Vishal to Rohit to Sanjay. And thank you so much for being so candid and so meaningful in all your responses. Till the time we see you next, goodbye and good luck. And I do hope you and yours are staying safe. And thank you so much for joining us for this series on the LiveMint Future of Payments. Thank you once again.